Okay, well, welcome to the stream. Today we're looking at probably following the channeling pattern. Looks like it finally experienced some resistance. Last time I checked it was up here, and then now it's more down here. So we're just going to see a continuation of this pattern. We'll see if it's going to break down or break up. But I'm sort of expecting it to just follow along these general guidelines, support and resistance. Let's check out the Wall Street breakfast. Win number one, top short idea, Destiny Media. Short idea, care.com. Looking good, okay. Economy, fine. Further weakness. Swiss National Bank had no option but to exit its cap on the franc last month, as the international environment had changed, said the head of the central bank, Thomas Jordan, on Saturday, citing the ECB's new quarter-end policy. This would have put enormous pressure on the franc and forced the SNB to buy around 100 billion francs worth of foreign currency a month to defend the cap of 1.20 francs to the euro, he added. Okay, cool. Sweet. Okay, those are all fine. Alright, let's check out Amazon fundamentals and DCF valuation. Yep, obvious. Largest internet-based retailer. Experienced some relatively poor circumstances earlier this year. Quarter 4 2014 saw success, with profits beating analyst estimates. Losses and guidance have also been less problematic than expected. These numbers, when coupled with Amazon's healthy fundamentals, e.g., its Amazon Prime growth, AWS expansions, and ventures into content creation, seem to have resulted in positive analyst and investor sentiment. Amazon's futuristic growth business principle yields long-term value when considering its customer-oriented model, along with a growing online shopping industry. A DCF valuation, with assumptions based on Amazon's strong fundamentals, suggests an undervalued price. Okay, sweet. So that's all good. Let's actually check out the stock too. Let's check out the chart. Well, yep, gapped up. Looks like it had earnings, and then it just sort of beating, and more or less going with the market right now, though. Yeah, market's trading. Looks like it's trying to push up. That's kind of nice. Trying to get some gains. Trying to do some push-ups. Trying to get that bro treatment. Cash position at Toyota looks strong. Okay, sweet. So we're just gonna look at reasonably good day. Yeah, we're looking good. What I would guess, though, is we still go along these lines right here. So today's topic is position trading 101, also known as how to make some quick Valentine's Day cash trading stocks. If you have seen my previous things, then you would know that this is sort of a cheesy topic. But you know what? I'm going to go with it because I planned out my content, and I'll just keep refining it and getting better and better as we go along. What is position trading? Position trading is what you would call sort of a shorter midterm strategy. It can be one day or it can be several weeks. It's not like I'm trying to make it in 5 minutes. It's more or less a swing trade. But let's say you're trying to make money by Valentine's Day, so Saturday. So you got about 5 market days, including today, and then assuming that you actually want to be able to withdraw the cash, and it's not going to take time to do that, we're looking at about 3 days to make the trade, and then 3 days to withdraw the money from the account and have it sitting inside your bank. So, how much are we going to look at making? Well, assuming you're not blowing your entire budget, like, assuming you're not going to go super all out, let's say $100 or $200. So how can we make $100 or $200 within the next few days? And I'm just going to explore that. So the easiest way is to look at is to look at the overall market trend. So what are we looking at? The overall market trend is going down. We can pretty much bet that. And let's see the previous day's actions. So it looks like it's trying to move slower and slower, which actually means that it's more bullish, it's more biased towards going up. But assuming that it does go down, we could look at something like this, or like this, or like this. Now, it's not guaranteed, but it's a reasonably good chance. So let's look at things that trade along the curve, typically Nike. Yep, see they're trading down. Yep, they're down on very light volumes. It's like a Pepsi. Oh. Yeah, see they're more or less down with the action. They're more accurate example, I would say. Let's look at Walmart. Yeah, more or less trading with the action. Cool. Let's check out something a little more volatile. Netflix. See, even they're trading down a little bit. They're trying to move down through that curve. Yep, just gonna update all that. Cool. Yep, still looking pretty bullish, except it's just starting to consolidate. Good for Netflix. Okay. It's like a Caterpillar on the. Okay, sweet. Moving above the 7. Yep. Right now they're outperforming. So, with a position trade, typically you want something that it's more or less a trend, but it's not quite a swing trade. Swing trade, I guess in this case it would be. Okay, this guy's very annoying. I shouldn't let him see the stream though, because if I call him annoying, that could be bad for business. Oh my god. Okay. Professional. It's just early in the morning. I apologize. Okay, so they're continuing to trade down. Something I would actually probably do is just because the market is down and because GoPro is down. So let's see what I'm looking at. In case you don't understand what I'm looking at, here's what it is. Okay, so Bollinger Bands, they're, I mean, I guess they're starting to contract. Um, just move in like here. Uh, Down here, they got some bad news, relatively good earnings, but then people started talking. It looks like they're continuing to move down with the market action, extremely light volumes. Only 37 shares. Oh, excuse me, 374,000 shares today. Actually, quite a bit. But they just continue to climb down. According to Seeking Alpha, their position with Zacks Research, they say fair value estimate is about $36, and we're starting to see all the signs associated with that. Stochastics going down, which just indicates buying action. MACD channel going down. RSI channel going down. Volumes sort of indicate that. Volume bars sort of indicate that. Just sort of as a um, oh, we already got that one. Okay, let's look at the cash flow. Money flow index. Cool, money's flowing out of it, so this would actually be a good way to go with the swing trade. So let's break down these indicators a little bit. Bollinger Bands, my favorite, sort of like a pipe. So when the pipe is close together, there's a lot of pressure. So how do you release the pressure? Well, you open up the pipe. So pipe gets opened, boom, flows. Pipe gets tighter again, boom, crashes again. Boom, pipe gets tighter, and then I see it crashing again. How much action is that? That's another $10. It might not be this dramatic, but going with the market, going with what everyone says, starting to go down through the 80. I think it's a pretty safe bet that the will go down again. Is that guaranteed? No, nothing's ever guaranteed, but this is my hand of poker. I'm saying that GoPro will go down. Will it's not that it will, but it just has a very good chance of going down again, at least slightly. Then that could get you your Valentine's Day cash. So we could say GoPro going down, good trade. Check out McDonald's. McDonald's, it's a lot. Okay, so what we're looking at is extreme actions going with the market. Looks like they're being sold off today as well. They also had bad earnings, as you can see right here. Pretty dramatic fall off. Channeling up, channeling up. Yeah, falling below 7-day average. Floated above before, and assuming the market is going to be continuing to behave how it's behaving, the McDonald's Corporation is going to channel down again. Landscape, full chart for the last 6 months. Yep, pretty much just going with the market. Okay, good to know. Thank you for letting me know, Mr. Stock Charts. So in case this is for you, let me just reassure you that if you are along these charts long enough, then you will get used to it. It's almost like, well, I guess it's like everything on the internet. I remember there's this TED Talk, and a guy was saying that he gave up internet for a year. to just live this very simple lifestyle. Excuse me. And what he experienced after 1 year was he felt better relationships. He felt more connected to people, and he once he started going back onto the internet, he realized how overstimulated we are. So, everything just overwhelmed him. I imagine if he looked at this chart, he wouldn't understand what the fuck was going on. You know what I mean? Like, he would understand what this line means or what this line means. He would just see like this huge, overwhelming mess. So, I sympathize with you if you don't understand what's happening right now. What I advise is just take it one step at a time. Just hit that 5% rule. Maybe if you don't understand now, maybe you don't need to have, 6 layers of indicators happening. Maybe you just have the 7-day average and the Bollinger Bands. Maybe you don't even have the 50. You don't have any of this. And you'd still get some pretty good data. Let's check out some more news. Facebook insider unloads $66 million of Facebook holdings. That doesn't really concern me. That just means to me that he wants to make $66 million. Who doesn't? Coca-Cola set to report Tuesday. That's actually a little interesting. Can Parker Caterpillar effect? We'll see. Exposed to very similar end markets as Parker Hannifin. Parker projections and stock price has not been influenced by recent macro conditions. That's not a very good summary. Okay, it's a set of different headlines, so I'm not even going to bother. It's not like I need to trade that company. We like the company's stake in Monster and Green Mountain, but we don't think earnings will do much to move the stock. Probably not. Most consistent long-term stocks in market, in the Dow. I mean, I guess I agree, but it's not like it's had dramatic action since 94. And 94 being when Warren Buffett started getting into that position. So yeah, Coca-Cola in general was an underperformer. So yep, Amazon looking pretty good. Oh, heat maps are up. Haha, good thing I'm out of the XLF. Okay, so I sort of see why the market is slightly down. Strong action isn't strong enough, and weak action is weak enough. That's one way to generalize it. So yeah, I mean, my positions right now. Right now I'm holding Apple. Apple right now is outperforming slightly. Holding Berkshire B, sort of underperforming. Ooh, okay, fair. Bonds going up. Okay, let's check out TLT. Cool. Okay. So climbing back up, opened here, going right there. So that's always positive. Let's see if it can meet the 7 again. If it comes right up here, then I'll be pretty happy. Ford. Big bet on Ford by BlackRock. Okay, let's check out Ford. There's been a lot of news on them today. Oh, that's not what I want. No, god damn it. Okay. Okay, so Ford, above the 7, climbing higher, outperforming the market. Really, it's only up 1 cent, so that's not very significant cash flow at all. I mean, I guess on their scale, it's pretty significant, but if you're comparing it to maybe like a regular trader, because 1 cent move, whatever that's like hundreds of thousands of dollars. But it's not really anything to talk about when we're talking about regular price action and then just trying to make money off of it. So right now everything is saying that it's about to be overbought, but people are buying it, so that's always a good sign. Getting to getting towards that overbought range. Not that it's a hard and fast uh, rule that if it crosses this line that it's overbought, and that if it crosses this that it's oversold. Same for these ones, but generally that's what it says. Check out Facebook. Facebook even more underperforming, I would say. I'm guessing that's just because of the news that they're building a park. That is right, they're helping build an park. So that's sort of fun. And I'm not really concerned about any of these actually. I got I got a few months on them. So those are going to be just fine. Mm-hmm. Okay, so nope, still the only one. So I'm just gonna close this video pretty soon, early in the morning. So yep, position trade. You're looking for short-term trends, looking for news, and you're going to want to trade more or less along with the market. Right now we're pretty lucky, and we're lucky in the sense that the market is giving us very predictable action. It's not going to be quite as dramatic as these as I'm predicting, because you can see right here, market's going up, market went up fast and then it went down fast. Sort of like Tai Lopez's fence analogy, fence metaphor, whatever. A fence that goes up fast goes down fast. So it goes down, and then it starts to want to reverse, and then it goes down here. And then, see right here, this body is a little bit skinnier, so you can actually see this go up. But it does look like bears will have a little bit of action, and if you're going along with even specific things, then you can sort of I wouldn't trade this until about noon, see where it is. So check this around 3 p.m. Eastern or 12 o'clock noon Pacific, which is my time zone, and then see if this is still headed downwards. And what I'd guess is it's more biased to go towards the lows rather than trade back up. With McDonald's, I'm guessing the same sort of thing. So they've already had 700,000 shares traded today. Looks like a lot of them are sell-offs, and I can sort of see why. People are panicking on this one, and I'd actually say top risk reward for the day as well. McDonald's, you're going to want to put on them. So let's check out the price action. Yep, sort of the same indicators. Simple over to the options chain. Check out all expirations and all strikes, just because I don't want to go through weird amounts of hassle. So check out. Okay, so this is something that I'm not usually gonna advocate that you do, but I'm gonna go with a. Actually, I guess I'll go with a relatively shorter position. We're trying to make some holiday cash. We're doing like a holiday trade. So, this is just a semantics sort of thing. Maybe not even semantics. This is just sort of a anecdotal thing. But people will rationalize any different kinds of ways to make trades. So for Christmas, it was like, well, I just can't imagine anyone not wanting to trade Netflix, not wanting to watch Netflix with their family. And then, uh, lo and behold, stock for Netflix actually goes up. So you say that, and it does go up. It's not necessarily that it's because everyone during Christmas wants to watch Netflix, but it's because more or less Netflix just wanted to climb higher. They're starting to bring in cash, but from the trader's mindset, it's just a rationalization. Now, in the same kind of rationalization, same sort of rationalizing behavior, will we see a lot of action for McDonald's this week? Well, you could say during Valentine's Day, no one's going to want to necessarily take their date to fucking McDonald's. You know what I mean? No one's going to want to go and be like, "Hey, honey, let's have a really romantic dinner out today. Let me buy you a cheeseburger. Let me buy you this $1.39 cheeseburger. Matter of fact, just because it's our special day, let me get you a cheeseburger and some fries. You want some Coca-Cola with that, and then maybe you see Coca-Cola stock going up. But they also have earnings, and looking like they're gonna have good earnings. So let's just say you want to make some quick cash without overly huge amounts of volatility. So what would I do? Okay, so let's look at the most recent action. So they're trading at 92.82. Okay. So as a general rule, you can do this for calls and puts. You can just go one or two strikes in the money. So 92, 91.50. Then go right there. Oh, I don't want to do that yet. This sort of concerns me because there's no open interest. So I'd probably go right here. Pretty large spread. So what if we go 39 days in? 92. Yeah, see these are slightly more safe just because if there's open interest and the market maker can't make a position against you as easy because everyone's there, and these spreads are looking nicer too, 5-cent spreads, so you'll be able to get it. You'll be able to enter and exit more easily. And yeah, see, it looks like other people have the same idea as me. They're putting puts down here. A lot of people looks like they entered early to get over here. They entered when it was still in 93s. Check this out right here, down $1.16. Whereas in the other chart, it's only down a few cents. Oh, so if I were to make a trade right now, I'd go March 20th. I'd do a 90 put on McDonald's. Nice little 5-cent spread. and then cash out by Wednesday or Thursday. That's most likely dates that you're going to want to go into to take your profit. So this is Chris, and talk to you next time. Oh, right. I actually have to actually have to go to this thing, and then I actually have to sign out and live. I really like this software. If you ever plan on doing your own live stream, then go here. It's pretty fun. Okay, so I could riff for the next 22 minutes, but that would be pain. So I'm just gonna stop it right here. Peace out.